Well, hello everyone and welcome to today's webinar. We have a special presentation webinar today on the National Flood Insurance Program Changes and Beyond with Edie Lohmann, who is the NFIP, I'm going to get that right, insurance specialist for FEMA. And as always, today's a special presentation and we're super excited to jump in and get things started. But let's make sure that everyone can hear me, and everyone who's joined us before, you know the drill. So if you can hear me, if you would just type yes or no in the question box in front of you, I would really appreciate that. Yes, we're good. Wonderful. Thank you, Bill. Thank you, Susie. Absolutely. It looks like we are good. That is a great way to start the webinar off today. I am super happy. Thank you. And like I said, we are super excited to welcome Edie Lohmann with us today, and she's going to be talking about the National Flood Insurance Program. And I have learned recently that we have a lot of Arizona realtors who have questions about the program, about what's going on, the future, how it impacts us. And I got to tell you, we're thrilled that Edie has made time in her schedule to join us today. And I am not going to keep us much longer. I'm going to turn everything over to Edie. All right, so Edie, welcome to Arizona.
Thank you, Kelly, and everyone. Thank you very much for sharing your time with me this afternoon. As Kelly said, my name is Edie Lohmann, and I work for FEMA Region IX in Oakland, California. I am the National Flood Insurance Program insurance specialist, and it is a thrill to be here with the Arizona Association of Realtors, and we hope that we can answer some of your questions today. We have quite a lot of changes going on recently with the National Flood Insurance Program that most of you are probably aware of. So that is pretty much our agenda today, is to talk about the status of the National Flood Insurance Program and where we are going in the future. So with that, so our agenda today is I would like to start off by giving you just where we are today with the National Flood Insurance Program. We had some new legislation passed to introduce some reforms to the program, and we began implementing that new legislation back in January of 2013. We have some significant changes that just went effective April 1st of 2015 that I want to share with you. And then we have some wonderful tools and resources that we also would like to share, so that if you have additional questions or you need additional support, you know where to go. And then we'd like to address some of your questions that you have, concerns, comments, as we get towards the end of the program. So with that, let's talk about the National Flood Insurance Program at a glance. And from here on in, you'll see that I have renamed the National Flood Insurance Program NFIP. So that's what the NFIP stands for. FEMA is part of Department of Homeland Security, and FEMA oversees the day-to-day operation and implementation of the National Flood Insurance Program pursuant to legislation and regulation. These are all of our industry partners. We work with lenders, we work with realtors, who have a tremendous influence in what we do at the National Flood Insurance Program, and are very supportive partners. Insurance agents who service flood insurance policies and get those policies out to the general public. We work with our federal, state, and local partners, and also our private industry partners. All of our associations, Association of Surveyors, Engineers, Realtors, Insurance Agents, Mortgage Brokers Associations, all of those folks help us keep the program real, if you will. So Nationally, right now, we have 5.3 million policies in force countrywide, which equates to about $1.3 trillion in insurance coverage. We have 22,000 participating communities countrywide. And a statistic that I always like to throw in is that 70 to 80% of all the natural disasters that we see in this country are flood related. And that's particularly important because, as you're well aware, the West Coast isn't so much worried about water. They're worried more about drought, right? Drought is the big topic of concern, but what most people don't realize is that every good drought is followed by a big flood, and that has historically been a fact. And flooding also, drought also introduces some very unique flood risks for us with the National Flood Insurance Program. For instance, wildfires. So we're going to see and have seen a climbing wildfire season. The frequency and the severity of those has gotten worse. And when we remove the vegetation of those land areas, just a little bit of rain is enough to flood a lot of people who perhaps were not as subject to flooding as in the past. So that really increases their risk. And the thing with flooding is that it knows no boundaries. So whatever flood zone you're in, you can be flooded. Where it rains, it can flood. That's really the bottom line. Even where it doesn't rain in the West Coast, it can flood for other reasons. In Region 9, which is what our FEMA region covers, and it's comprised of the states of Arizona, California, Nevada, Hawaii, and some of the Pacific Trust territories. I just thought you might like to see the policy counts. Arizona is actually the third largest policy count for flood insurance policies in our region after California and Hawaii. Then we have Nevada and the Pacific Trust territories. So just put that in perspective for you. So let's talk a little bit about legislation, and let me provide a little bit of an overview for you before we talk about how that's going to impact the National Flood Insurance Program. As many of you may be aware, on July 6 of 2012, the Biggert-Waters Flood Insurance Reform Act was introduced, also known as BW12. One of the impetuses of that reform legislation was to put the National Flood Insurance Program on more financial footing. And it had major reform impacts for all parts of the National Flood Insurance Program. On March 21st of 2014, certain provisions of the Biggert-Waters Flood Insurance Reform Act of 2012 were modified or repealed to make it more consumer friendly, if you will. So let's talk a little bit about what the Biggert-Waters Flood Insurance Reform Act of 2012 did. And again, that was enacted July 6th of 2012, and that was the first piece of reform legislation which, for the most part, is still moving forward and being implemented today and will continue to be implemented. It had many provisions in it that impacted the National Flood Insurance Program. One of the major provisions is it extended the National Flood Insurance Program. It reauthorized the program through September 30 of 2017. The National Flood Insurance Program is normally reauthorized by Congress every 5 years. So when I said that the Bigger Waters Reform Act impacted many parts of the legislation, you can see on this slide that it truly did. There are provisions in that legislation, 18 of them, that impact other risk reduction in studies. That means essentially it's looking at the FEMA grant programs, and it is taking a look at how those are administered and how we can get the money out faster to our survivors, how we can make better use of that money to their benefit. There are many provisions addressing FEMA mapping. FEMA works with the local community, well, actually our state and local partners and other federal agencies on mapping. So they are looking at that to make sure that they are technically accurate and they are using the best data and methodologies available. And then there were 18 provisions that addressed flood insurance and the rate structure. 2 of those, of the 18, FEMA had been directed by Congress to start implementing, and those were known as Section 205 and Section 207. Section 205 was targeted to begin phasing out subsidized rated policies on older buildings known as pre-firm buildings located in high-risk areas, and those are flood zones A as in Adam, V as in Victor, and D as in David, with the exception of AR and A99 zones. And specifically, Section 205 recognized that there were about 19% of our policy base that was older buildings located in these high-risk flood zones that had historically been subsidized by the program since it began in 1968. And Section 205 of the Bigger Waters legislation required that these subsidized premiums be phased out. And in some cases, they were to be phased out immediately when a property changed hands, let's say it was sold, or the policy lapsed, or the property owner in one of these buildings picked up a new policy. Let's say they did not have a mortgage, they had paid it off, but subsequently decided to go back and get a home equity loan. They would have been subject to this immediate phase out of their subsidized rate. Section 207 was the second section that we had not implemented yet, and it addressed phasing out how we had historically rated policies when there was a map change. That section was still under evaluation when it was actually repealed by the Homeowner Flood Insurance Affordability Act of 2014, which we're going to talk about right now. The Homeowner Flood Insurance Affordability Act of 2014, also known as HFIA, was enacted March 21st of 2014, and it modified and repealed some of the sections of Bigger Waters, but not all. And it required that subsidized rates be phased out more slowly so the impact would not be as severe to our customers. So let's talk a little bit about HFIA, or the Homeowner Flood Insurance Affordability Act. There were some new provisions introduced. As I mentioned, it repealed some of the triggers requiring immediate full risk rating, like when a property owner in an older or pre-firm building that was located in a high-risk area sold their property. That was one of the triggers that would require full risk rating overnight. That was repealed. It reinstated those pre-firm subsidized rates that we had historically offered. Introduced rate cap increases. And we'll talk a little bit more about what the cap is on those annual rate increases in a minute. It repealed Section 207, which would have required a 5-year phase-in to full risk rates for properties newly mapped from a low to moderate risk area into a high risk area. It restored what we called zone grandfathering, where we allow property owners currently to maintain their flood insurance policy rating based on their flood zone, if they've had continuous coverage, or if they were built compliant to the ordinances and floodplain management ordinances and regulations at the time they were originally constructed. It also continues to allow us to offer policy assignment. So if I buy your house, you can assign your policy to me without a break in coverage or without a resulting rate increase or premium increase. It requires the development of an installment payment plan, which is currently in development, and that will be for those homeowners who currently do not have their flood insurance already escrowed by their lender. And it provides an increased optional deductible for residential buildings. In addition to that, it requires that FEMA build or continue to build a reserve fund through an assessment to offset the full risk rate, the trigger that required full risk rating immediately. Congress introduced a new annual surcharge on all new flood insurance policies. It's an annual surcharge that we'll talk about in just a minute. It provided additional funding for an affordability study, which is currently underway by the National Sciences Academy. It established a new flood insurance advocate office. So that's a very high-level overview of the two pieces of legislation. And what I'd like to do now is talk about what is actually being implemented as a result of the introduction of BW 12 in 2012 and HFIA most recently in March of 2014. That would be the April 1st, 2015 changes. So if you are wondering where you can find information, specific information on what we are about to go over, you'll see two documents on your screen right now. One is what we call a Write Your Own Bulletin. That's on your left. And that Write Your Own Bulletin outlines the April 1st, 2015 changes. It's intended for insurance agents, but it's a public document and provides a really good summary with detail and with the new rate tables that will be effective April 1st, 2015. And you can find it on the NFIPiService.com website. To your right is a fabulous fact sheet that is relatively new, that is on the NFIP homepage at the website you see at the top of your screen on the right. And the fact sheet's entitled How April 2015 Program Changes Will Affect Flood Insurance Premiums. And I think you'll find that really beneficial. So to kind of summarize what you will see on that fact sheet, I'm going to highlight some of the most important items that I think you should be aware of with the combination of the two pieces of legislation. This is one. So the Homeowner Flood Insurance Affordability Act introduced rate increase caps, and those consist of no more than a 15% annual increase for any single risk category, or no more than an 18% increase for an individual policyholder, with some exceptions. And those exceptions are 4 specific categories of properties that were called out in the legislation by Congress, and those impact the older pre-firm subsidized rated buildings that are in the high-risk area and are non-primary residential buildings. These are rental homes, second homes, vacation homes, severe repetitive loss properties, which we track in the National Flood Insurance Program, any building that had substantial damage or was substantially improved but for whatever reason was not required to be brought up to current floodplain management ordinances and standards, and pending those business properties. They will be looking at 25% annual rate increases per the legislation, and these 25% increases, this provision was really from the Bigger Waters legislation, and we began implementing the 25% rate increases January 1st, 2013 under the Bigger Waters legislation for non-primary residences, and then later added severe repetitive loss properties, and then substantial damage, substantially improved buildings. Businesses will be added to this category in 2016. To offset the immediate trigger for these pre-firm older buildings in high-risk areas that under Bigger Waters would have been required to go to full risk rates immediately, Congress required that we implement a new annual non-refundable surcharge on all new flood insurance, new and renewal flood insurance policies each year. And the surcharge is $25 for a single family primary residence and $250 for all other policies. It is important to note that this surcharge is not subject to the 15 to 18 to 25% rate caps. We have hot off the press a brand new surcharge fact sheet, which you might find very useful if you have clients who are asking you about the surcharge. It is called out on their application for flood insurance as well as their declaration page, or they have questions about documentation to show that it is their primary residence. This would be a fabulous fact sheet to share with them, which is on our homepage at FEMA.gov/NFIP. So the $50 million question is, when will the surcharges stop? The surcharges are there until we have phased out all of the subsidies under the program. And so it's important for people to know what is their full risk rate. And when I say their full risk rate, I mean full risk rates are when we are looking at the specific underwriting criteria for the building. And full risk rates reflect what their true flood risk is. There is no subsidy to those. About 81% of our policyholders in the National Flood Insurance Program are already full risk rated. So we're really focusing on the 19% of the properties that we know are in harm's way, that are older, that we are trying to phase out those subsidized premiums while also implementing mitigation measures to help get them out of harm's way. And I think that's a very, very important component. We don't want to just, the intent is not just to price them out of the market. There are many other provisions of the legislation that are addressing how can we provide funding for mitigation for these structures that we know are at risk, because the whole goal of the program is preservation of lives and property. So we are in fact working on that. So we are encouraging folks to get elevation certificates, because that's really the only way that we know what their full risk rate is. And an elevation certificate needs to be completed in most cases by a licensed land surveyor or registered civil engineer. Some communities who participate in what's called the community rating system already have elevation certificates on file. So property owners can check with their local building or permit or engineering department first before they venture out to purchase one on their own. The cost of elevation certificates vary. We have required elevation certificates historically only on post-firm rated buildings that are in high-risk areas. So those buildings that were constructed post-firm, meaning they were constructed after the community had its first flood insurance rate map, or they were substantially improved, those structures should have been built compliant when they were originally constructed. Therefore, we use an elevation certificate to show what their true risk is, and their rate, their premium, is based on that actual true flood risk. This is the way that we are moving for the older buildings, for all of the buildings eventually, where we have elevation information. So the elevation certificates are going to be phased in for the rest of the building policyholders going forward. Under the Bigger Waters legislation and continuing with the Homeowner Flood Insurance Affordability Act is the reserve assessment. The reserve assessment is to establish, if you will, a catastrophic fund. I don't think it's any secret that the National Flood Insurance Program is currently $24 billion in debt. The program, since its inception in 1968, has worked very, very well. What we are hearing from meteorologists and the science community is that we are likely to see the frequency and the severity of flooding across this country get much, much worse. And as we have seen with Hurricane Katrina, Wilma, and Rita back in 2005, as well as Superstorm Sandy in 2012, the National Flood Insurance Program isn't necessarily designed to handle a superstorm, a storm of that magnitude, but we need to be ready for that. Thus the reason why we are now required to establish a reserve fund, which is going to be very similar to what we call in private insurance like a reinsurance fund. However, beginning April 1st of 2015, the reserve fund assessment that we had been charging, which was 5% under bigger orders, is increased to 15% for all policyholders except those policyholders in what we call a standard preferred risk policy, which is what PRP stands for. So they will have a 10% reserve fund assessment on their policy. This is a reserve fund assessment that is for all new and renewal policies, and it's an annual fund. To offset some of these fees and surcharges, we have introduced a new optional deductible for residential properties up to $10,000. So subject to a lender's approval, the policyholder can elect a $10,000 deductible, which will serve to offset some of these increases for them. We also have a new procedure that we are using when property owners are remapped from a low to moderate risk area, a B, C, or X flood zone, into a high risk area, which would be an A, V, or D flood zone. This procedure is called the newly mapped into a special flood hazard area. For those of you that are familiar with the National Flood Insurance Program, you will recognize this as a program that is very similar to what we used to call, before April 1st, the Preferred Risk Policy Eligibility Extension, or PRPEE, which is a mouthful. However, this is a good procedure that I want to let you know about, because if a policyholder is remapped from a B, C, or X flood zone into a high-risk flood zone and they have a federally backed mortgage, under federal law, the lender is going to require flood insurance, and we want them to take advantage of this newly mapped into a special flood hazard area procedure if they can, because under the new legislation, the Homeowner Flood Insurance Affordability Act of 2014, it requires or gives us the ability to be able to offer the equivalent of the standard preferred risk policy premium, which is very inexpensive. It's a policy that is designed to be low cost, and it's generally offered only to policyholders in B, C, or X zones, because about 25% or more of our flood insurance claims come out of B, C, or X zones. So the standard preferred risk policy is to encourage people that to voluntarily buy flood insurance, even if they don't have a lender requirement. So this newly mapped into a special flood hazard area procedure gives these property owners who are newly mapped into a high-risk area an opportunity to get covered by flood insurance at a low cost, to ease them into the transition of being required to have flood insurance. Now, one thing that you should be aware of is that under this new procedure, if the new map goes effective August 1st of 2015, let's just use that date as an example, and they're being remapped from a B, C, or X zone into a high-risk area, an A, V, or D zone, they have 12 months from the new map effective date to make sure that coverage is effective. So in this example, if the new map goes effective August 1st, 2015, that means that they have to have coverage effective by August 1st, 2016. Effective needs to take into consideration that most, if not well, most NFIP flood insurance policies have a 30-day waiting period before they go effective. So they would need to buy the flood insurance before 30 days to make sure that they get inside that 12-month window for the coverage to go effective. If they already have, if they would have been eligible for our old program, which again is the Preferred Risk Policy Eligibility Extension, that means that they would have been newly mapped from a low risk into a high risk area sometime between October 1st, 2008 and March 31st of 2015. If they don't have a policy, they should think about locking into one and will need to do so and have coverage effective by March 31st, 2016. And again, you need to be cognizant that we have a 30-day waiting period. So they need to do it at least 30 days before March 31st, 2016. And that's for those people that, again, would have been eligible for our old Preferred Risk Policy Eligibility Extension, but did not take advantage of that at the time. So here's the simple message. If we have map changes where property owners are being mapped from a low-risk area to a high-risk area, the easiest thing to do is have or recommend that they go talk to their insurance agent about buying a standard preferred risk policy before the map changes, because it's the cheapest, easiest, quickest, surefire way to lock in to the best premium going forward to make sure they don't miss any dates. And so that is my message to you when we have map changes, is to recommend that they talk to their insurance agent before the map goes effective and that they get a flood insurance policy before that new map goes effective, putting them into a special flood hazard area. That's the best thing to do. It's a simple message that clients really do appreciate, rather than going through all of the, well, you have to do it within 12 months, and it can be very confusing and overwhelming to them. Key takeaways. Really, this legislation, while there are many, many, many aspects to it that will impact every part of the National Flood Insurance Program, we really want to make sure that property owners know their risk, that they understand what their risk is where they live, they know their role, and they take action by buying down the risk, protecting themselves with a policy for flood insurance, talking to their real estate agent, their local community officials, their state partners about building safer, stronger, and smarter. Where we have an opportunity to build a better building, we definitely want to do that. Some tools and resources that are out there for your use is, this is one of my favorites. I apologize, that really is the long website that it's on, but I wanted to put that up because you can go down and you can download this document, and the National Flood Insurance Program policies are serviced and administered by our private insurers that are partnered with the National Flood Insurance Program. There are currently over 80 of them that we call Write Your Own Companies. Most of them have vendors, flood processing vendors, that you will see on the right side of the document, that do all of the policy, the flood policy servicing for them, and the handling of any policy changes or administering of the claims process. So if you have a client that has a policy or claims inquiry, this is the document where I would refer them. There's one toll-free number for claims inquiries and one for policy inquiries. And the companies are all listed alphabetically, so they're easy to find, and it gives you the name of their flood vendor on the right-hand side. It's a very handy document. The other document that I developed for FEMA Region IX is this fact sheet of National Flood Insurance Program key contacts. And it has on the front all of our toll-free numbers and what those toll-free numbers can address, what subject matter they can address. On the back of the key contact sheet are all of the important websites that people can go to get a variety of different information. I wanted to show you our National Flood Insurance Program homepage. Something for everyone on that homepage. We also have an outreach and marketing website called FloodSmart.gov. And FloodSmart.gov is fabulous. There are sections on there for property owners, for community officials, for realtors, for insurance agents, for property owners who need to find a insurance agent to write a flood insurance policy. They can go to our FloodSmart.gov website. There's really important information on that website talking about wildfires and flood risk. In the bottom right-hand corner, this is a snapshot of the section that talks about what does the NFIP reform legislation mean to you. In the upper right, how will the new flood maps affect your risk? So it is a very easy website for property owners in particular to navigate. We have a number of public outreach materials for all of our NFIP stakeholders that are located on both the NFIP website that you see on your left and also the FloodSmart.gov website on the right. These include specific realtor outreach materials, some of which you see on your screen right now. Additionally, we have a lot of webinars and video tutorials that are available. These are all free training webinars and video tutorials. They are on our homepage. It may say insurance agent training, community official training, but it is open to all of our stakeholders, and they have some very good topics, including the April 1st changes and the new legislation. So that was a crash course in what is going on with the National Flood Insurance Program. And I will stop there, and I thank you for your attendance today and for your attention.
Wow, that's a ton of information. Thank you, Edie. Our next slide is your contact information, and I'm going to go ahead and put it up. Do you have a preferred way of being contacted? I know it includes your phone number and your email address. Is there a preferred method?
No. You can use, when I'm traveling, I forward my phones to my cell, and I'm attached to my email at the hip. So I do travel a lot. If I think there's going to be any kind of a short delay in getting back to you, I usually always try to leave a message on my phone and my email, but I will get back to you. I absolutely love what I do. I love to hear from you. I love your questions. I don't promise that I can answer all of them, but I will do my best, and I think I know where I can go to get the answers if I don't know. So
it kind of sounds like in the real estate industry we have a saying, to be the source of the source.
Right.
So it kind of sounds like you're the source of the FEMA source.
Right. Try to be.
Very good. I have some questions for you, and you'll have to kind of let me know about like specificity on some of these questions. They're very property specific. So would you prefer those questions, do you want me to go ahead and ask them to you, or would you prefer them emailed over to you?
Property specific questions are difficult to answer because I will probably need to ask about 20 questions before I can answer a property specific question. And so maybe those would be best emailed, but if you have a general question that might benefit everybody, that would be great, or some example that pertains to what we talked about, that would be great.
Absolutely, we can do that. And folks, just to follow up, I did send out all of Edie's attachments that went with today's webinar. If you did not receive them, I can send them back out. Just let me know, and we'll be sending out a follow-up email, and it will have the links that Edie mentioned today in it as well. So if you missed out on anything, we will be putting them in the follow-up email. All right, so the first question, wow, is how far in advance can you find out about the new maps?
So that is a great question, and if you go to FloodSmart.gov, they have a section where you can type in either the city or a zip code, and it will tell you what new mapping projects are being proposed there, or the state. The other great resource is we are very fortunate in Region 9 to have wonderful communities in California and Arizona, and usually if you locate the floodplain administrator, which is usually someone in the engineering, building, or permit department, they will be able to tell you exactly what's going on with mapping projects in that community. They do a lot of outreach. Most of our communities are great about doing outreach to property owners about pending and upcoming map changes, and also hosting public meetings. In fact, I'm attending a public meeting tonight in the city of Globe for that very purpose.
Great. And is that meeting open to the public?
It is open to the public. In fact, the meeting is for the public.
Okay.
For a map change that it's a smaller map change, but it's a map change that they have coming up in the near future. So,
okay. Do you by any chance know where that meeting in Globe is tonight?
It is. It's at the City Hall.
Okay. And what time?
Globe, and the meeting is starting at. The meeting starts at 6:30, I believe.
So 6:30, City Hall in Globe.
Yes.
Perfect. Perfect. Well, thank you. All right. So Diane has been told that all providers give the same coverage with the same premium required by FEMA. Is that true?
It's a great question. It is true that FEMA oversees the National Flood Insurance Program, so the rates and the coverages are all federally set in regulation pursuant to federal law.
Excellent.
So even though it's administered by different carriers, theoretically, if you go to 5 different agents from 5 different carriers and you give them the exact same building underwriting information, and that's a key, they should come up with similar exact premiums.
Great. That is good to know. Thank you, Diane, for your question. All right, I'm going to read through some more of these. The new annual non-refundable surcharge, the $25 for single-family residents and the $250 for all others, is this a one-time fee or is this paid annually?
That is an annual non-refundable surcharge. So every year people will see that as a line item on their application or their declarations page.
Wonderful, thank you. And we have a couple of questions about the remapping that's going on. Can you just touch base a little bit more about that? We have looks like a property that was zoned one way, maybe moved to another one, and talk about the risk of being reassigned.
Right. So flood risk changes all the time, and the maps are intended to be kept up to date so that they are accurate and they accurately portray the flood risk that people can expect at their property. But they are a moving target, and by that I mean that there are constantly new developments being built. There are constantly floodplain management improvement projects going on, which will change how flooding occurs in any given area at any given time. So local communities can request that their maps be updated. FEMA our FEMA engineers work with the state and local communities on that. If a property owner is remapped from a low moderate risk area to a high risk area, they are generally notified well in advance by the local communities and offered an opportunity to go to public meetings to learn about why the changes are taking place, what is changing, if it's going to impact their property, and also if there's going to be a flood insurance requirement. And even if there's not going to be a flood insurance requirement, are there other flood risks that they should be aware of that they might want to consider buying flood insurance? And certainly their insurance agent should be a resource for them if they're considering buying flood insurance, or they're going to need it because they're being remapped into a high-risk area and they have a federally backed mortgage.
So if somebody has a question about mapping projects, who or where do they find their local floodplain administrator?
So the floodplain administrators are usually housed in the building, engineering, or permit departments of most local jurisdictions. And if you call and ask which department has the FEMA flood maps, that's the easy question, is which department has the FEMA flood maps? You will usually find the floodplain administrator working in that department.
Okay. We had a couple of people that brought up the fact that there's a lot of misinformation or a lot of spam, regarding the floodplains and the mapping and all the changes in information. Where is the very best place to go, or maybe your top 2 best places to go for accurate information?
Regarding map changes?
Map changes.
So I would recommend talking to the floodplain administrator, but definitely the local community, because they are the ones in the driver's seat with respect to requesting map changes and what's being remapped and why it's being remapped. I would also say that if you could go on to FloodSmart.gov. We also have a r9maps.org website. It's www.r and then number 9 maps.org, O-R-G. So www.r9maps.org. That website, we have much more detailed information on what maps are taking place, what map changes are taking place throughout the region. And you can click on your state, and then it will list communities with map changes. And I do like that resource because for me, it's an easy way to get a handle and quick way to get a handle on what's happening without having to call all over.
That would be great. Right. And last question of the day, and then maybe we can do just a quick recap of maybe the top 3 things people need to keep in mind. That's okay. So very last question comes from our friend Elliot. And Elliot would like to know, why would the insurance company have different maps than the FEMA site?
Everybody should be using FEMA's flood insurance rate maps. So, and they should be using the most current map. FEMA's flood insurance rate maps, you can actually go on to the Map Service Center online from the NFIP homepage, type in the property address, and it will bring up the panel where that structure is located. You can click on the panel, and then you can zoom in and out of the panel to see what flood zone that structure is in. So I would say that to answer that question, they should not be using different maps than the most current FEMA flood insurance rate maps, although I will tell you that sometimes local communities have additional data that is parcel specific that they can overlay on top of the FEMA flood insurance rate maps to show a more accurate accounting of the floodplain delineation for a particular parcel. And we do use that information a lot.
If somebody had questions like the different letters, the B, the C, the X, and what all those mean, which website should they go to?
So you want to go to the NFIP homepage. The NFIP homepage will have a good explanation of what those different flood zone designations mean. And I think the way to remember it is BCX zones are low to moderate risk areas where generally flood insurance is not mandatory under the federal law, although it is the lender's prerogative to always require flood insurance. And then we have A and V zones. And the A and V zones are the high-risk areas where if you have a federally backed mortgage, flood insurance will be required. And the A and V zones are generally A zones, riverine, more inland, creek, riverine flooding. V zones are, you can think of those flood zones as having some wave velocity attached to them. So if they're V zones, if they're like along the beach, coastal, okay, or the Great Lakes, where we're looking at wave heights 3 feet or above kind of thing.
That's very good to know. All right, so we have up on the screen your resources and Edie's contact information. So Edie, the top 3 things they should walk away with from today's webinar.
Don't lose my telephone number and email address, number one.
Number one, that's important.
And you'll often hear that when you call or you email me. I do have a partner that I work with, Adam Lazargo. He is a contractor with FEMA, but he is very good. He's the NFIP regional manager. And so use him as a resource as well. You will see his name and email address and telephone number on mine. Check the NFIP website. I think that's a really good resource for all things NFIP. And keep in mind that it's also a good resource for property owners, although I would say that the NFIP homepage is more technical versus the FloodSmart.gov, which I think is a much more preferred website for your clients. I would send them to FloodSmart.gov.
Excellent. We're going to sneak in one more question, and it looks like, and it was just basically what you just said. The lender always has a prerogative to require flood insurance?
The lender does have the prerogative to require flood insurance on any loan that walks through their door regardless of the flood zone. FEMA doesn't have any regulatory authority over the lender. The lender is responsible for being compliant with the Flood Disaster Protection Act of 1973, which is where the mandatory purchase requirement stems from, as amended by the National Flood Insurance Reform Act in 1994. So those are the two pieces of legislation that they need to comply with. Outside of that, though, they do have the prerogative to require flood insurance on any building where it's available.
That's good to know. That is great. Well, thank you so very much for joining us today, Edie, and for bringing this information to our members. We really appreciate it.
Thank you, and I appreciate everyone's time today.
Absolutely.
Thank you so much.
You're welcome. Look for an email from me within the next hour with all the contact information. And because you know that we absolutely love webinars here at AAR, just want to keep you in the loop. We have a new series starting in a couple of weeks for our Broker University members. And this is a whole series of webinars specifically for our brokers. We're going to be kicking it off on May 21st. With Holly Esslinger on how to run an efficient office meeting. We've heard sometimes that, agents are attending meetings, they're not getting enough out of it, and we are going to just jam-pack this lunch and learn with good information. We're going to talk about NA's office meeting in a box, and you are definitely going to want to join us if you're a supervisor, a DB, an office manager. And then back by popular demand, we're so excited to bring you June 3rd, Understanding the Eviction Process with Attorney Denise Holliday. If you joined us back in March when we talked about property management and fair housing, we asked folks, hey, give us some more ideas. Eviction kept coming up over and over again, so Denise is going to come back June 3rd, and we're going to talk about the eviction process. And if you have never gone through the process or done the paperwork, this is a step-by-step what to expect, what to be aware of, and it's going to be good information. All of our websites or all of our webinars, you can register for them on our website at aaronline.com/calendar. And also don't forget that today's webinar has been recorded and will be available on AAR's website, as are all of our webinars, 24/7, easily accessible for your convenience. So www.aaronline.com. There's the long URL right there, and it also is included in your follow-up email later this afternoon. Folks, thank you so much for joining us today, and we look forward to seeing you on May 21st or on June 3rd. If you have any questions, feel free to email me. And Edie gave out her information as well, so you can follow up with any flood insurance questions. Thank you so much, and have a great week.